Price retention in M&A, guarantee or abuse. In the complex world of mergers and acquisitions, retaining part of the price is a common practice, but it often generates controversy. Is it a legitimate tool to protect the investor or a tactic to reduce the final price? Price retention is an agreement in which the buyer holds back a portion of the purchase price for a certain period. This money is used as collateral to cover possible contingencies, such as breaches of warranties, tax liabilities, or litigation. From the investor's perspective, price retention is a crucial security measure. It allows them to protect themselves from hidden risks and ensure that the seller fulfills their commitments. However, for the seller, price retention can be seen as a sword of Damocles, especially if the amount withheld is significant. The key is balance. A reasonable and well-structured price retention can be beneficial for both parties. It must be proportional to the risks identified and establish a clear mechanism for the release of the funds. The M&A contract must clearly specify the conditions for the release of the price retention. This may include the achievement of certain milestones, the resolution of specific contingencies, or the passage of a certain period. Transparency and communication are fundamental. Both parties must clearly understand their rights and obligations, as well as the process for releasing the retained funds. The participation of the founder or seller in the company after the acquisition can be a critical factor. Their knowledge and experience can be valuable for the transition and management of the business. However, their absence can also generate uncertainty and make it difficult to resolve contingencies. If the founder or seller is no longer at the helm of the business, the buyer may have a greater tendency to interpret contracts more strictly, which could delay or prevent the release of the price retention. Ultimately, price retention is just one aspect of a complex negotiation. A fair and balanced agreement, which takes into account the interests of both parties, is essential for the success of the transaction. For more information on price retention in M&A transactions, contact our AI, Savvy and Atenea. More information at ilpabogados.com and ilpstartup.com.